The company A Limited is an sourcing entity for the Indian multinational groups incorporated in the country, X and 100% subsidiary of the Indian company. The value of the stock in them is only assets of the company and located in the country X. All the employees of the company so the country X. Average incomes are breakup of the company's total income 3 years. 30% of the income of transaction which purchases are made from the parties which is non-associated enterprises and sold to associated enterprises. 30% of income from the transaction which purchases are made from associated enterprises and sold to associated enterprises. 30% of income on the transaction which are purchases and made from associated enterprises or from non-percentage of associated enterprises. And 10% of the income is by way of interest. So interpreting the case, the passive income is 40% of total income of the country. The passive income is 30% of transaction which is both and say associated with the enterprises and 10% of income. So the II company satisfy the first requirement of a test of the active business outside India since no assets are employed in India and the requirement of the test is also satisfied. Therefore, the company is engaged in the active business outside India. Example B, the other fact remains same in the example 1. The variation of XAE Limited has total 50 employees and 47 employees and 47 employees managing the warehouse and storekeeping accounts of the company operated in country X. The managing employee, managing MD, chief executive officer, and sales heads resident in the total annual payroll expenditure of 50 employees of 5 crores. Annual expenditure respect of MD CEOs are 3 crores. Interpretation. Although the first glimpse of the activity business test to satisfy the AOA is only 40% of total income is passive in nature. Further, the more 50% of employees also certified outside India. All the assets are certified outside India. However, the payroll expenditure respect of the MT, CEO, sales of the employers in India exceed 50% of the payroll. Hence, the ALM is not the active business outside India. The basic facts are the same examples. Further facts are all the directors be limited of Indian resident during the relevant previous 5 years of the board director is held which two are held in India. The 5 meeting of board directors, out of which 2 held in India, 3 outside India. Government engaged in active business outside India. Fact that indicates example established majority of the board of directors have both held outside India. Therefore, POEM of Limited shall be presumed to be outside India. Point of enterprise management. Example 4. Fact of the sum of the example 3. But the establishment assessing officer that although A Limited senior management team signs all the contract about 10 lakhs of A Limited will be submitted the recommendation to be and BCO make the decisions where it's not a contract may be accepted. It's also seen during the previous year more than 99% contract about 10 lakhs and over the past 10 years also the same trend respective and contribution of the contracts were 10 lakhs the same. The fact suggests that the effective management of A Limited has been surpassed by the parent P Limited or POEM of A Limited may such a case may be presumed to be outside India even though the A Limited is engaged in active business outside India. The majority of the board director held outside India. Example 590 multinational groups as a local holding company A Limited and the company has 10% downstream. Indian multinational group has a local holding company A Limited in the country X and the company also have a 100% downstream of subsidiary B Limited and C Limited in the country X and the in country Y. A Limited's income only by the way of dividend and interest on the investment made in the subsidiaries. The place of the effective management A Limited in India is also executive of the ultimate parent company of the company. Subsidiary of ABC Limited is engaged in the active business outside India. The meeting of board of director ABCDO in the country. Interpretation merely because of the POEM all intermediate holding company in India. The POEM plays an effective management of A Limited in India and excisely by ultimate parent company of the group. The subsidiary BCD engaged in active business outside India. The meeting of the board of director BCD held in country action visit. So the POM intermediate holding company in India, the POM subsidiaries shall be taken into consideration. Such a subsidiary has been examined separately. The A indicates the fact B, C, D, O are independently engaged in the active business outside India. Majority of board of directors of the companies are also heads outside India. So POEM or B company, C company, D company are presumed to be outside India. The fact that CBDT via Circular 8 2017 23 2017 has clarified POEM guidance shall be applied in the companies having turnover of gross reserve 50 crores or less financial year. Illustration 3. ABC is a Swedish company headquarters in the Stockholm but not have a permanent establishment in India. Has set up the liaison office in Mumbai 2017 in compliance with RBI guidelines. Look after the day FD active business operation in India, spread awareness among the company's product and explore the further opportunity. The liaison office takes decisions related to the day-to-day routine operations and perform support functions that is preparation and acceleration. The significant business management and commercial decisions are, however, in substance made by the board of directors at Sweden, how determine the resident status of ABC Limited. Solution Section 6.3 provides a company will be resident in India the previous year if it's an Indian company at place of effective management in India. In the case of ABC Limited, is a foreign company where the resident in India previous year 2024 only the place of effective management in India. Explanation of Section 6.3 defines a place of effective management. The effective means the place where the key manager commercial relations and the necessary of the contract of business or entity of holder substance made in the case of ABC Limited. The place of effective management PE 2024 is not in India since the significant management commercial decisions are in substance made by the board of directors outside India and Sweden. ABC Limited now has only a liaison office in India, though it has looking after the routine day-to-day operations in India. The place where decisions relating to day-to-day routine operations are taken, support functions or preparing actuaries in nature performed are not relevant to determining the place of effective management. Since ABC Limited having a foreign company in a non-resident investment assessment here, since the place of effective management is outside India. The transition mechanism for a company incorporated outside India has not been asserted in the earlier tax chapter or 1 BC section 115G. Transition mechanism has been provided chapter BC comparison of section 115JB for the company which is incorporated outside India which is not assert to tax in India earlier has been resident in India but the less first time due to application of POEM. Section 15JB Power of central government to notify exemption, modification, adaptation subject. Section 115JB imposes central government to notify exemption, modification, adaptation subject in which provision of the act relating to the completion of the income tax, treatment of unabsorbed depreciation, set off of carry forward loss of a kind of losses, special provision relating to avoidance of tax and complaints of recovery of taxes shall be in the case where the foreign company said they are resident in India due to the POEM being in India for the first time and the said company has never been resident in India before. In the case where the determined regarding the foreign company to be resident in India has been the assessment proceeding. So in the foreign company resident in India, it's a previous year and the previous year ends on before the end of the assessment proceeding is completed. So, in the case of determining regarding the foreign company to be resident in India for being made assessment proceeding relevant to the previous year, then such a transaction would be also covered in subsequent previous year. If the foreign company is resident in India in the previous year, then the previous year ends on or before the date of which assessment provision is completed. In the case, the transition provision would also cover the subsequent previous year. Upon a date of transmit determination, POEM assessment proceeding. However, once the transaction is completed, normal provisional act will apply. The transition provision would also cover on subsequent previous year. If the foreign company is resident in India, the previous year and the previous year ends on the or before the end of which assessment year proceeding is completed. The effect of transition would also cover on subsequent previous year up to the date of determined POEM. However, one of the transition is completed, a normal provision of act apply. In the notification issued by the central government, certain conditions include pre-domicile conditions subject to which the adaptation shall apply. It can be provided for in the case of failure to comply with the condition. A benefit notification would be not be available for foreign company according to some previous year of benefit. Exemption or relief of the claim is granted to the foreign company in accordance with the conditions. As subsequent, there is a failure in complying with the conditions. The benefit exemption or relief can be determined as being wrongly allowed. The assessing officer may recompute the total income of the assessee of the said previous year or making the necessary amendment of the exemption notification of the application of the notification does not apply. The provision of section 154 shall on the case apply to the period of 4 years notification. Mistake apparent of the records. According to the previous year, any benefit, exemption, relief has been claimed and granted to the foreign companies in accordance with the notification. Subsequent this failure to comply with the conditions specified therein, then the benefit, exemption, relief shall be deemed to have been wrongly allowed. The assessing officer may recompute the total income of the assessee and the said previous year and make the necessary amendments as if the exemption, modification, adaptation of the notification does not apply. The previous section 154 shall so far as may be applied thereto when a period of 4 years or rectification of mistake apparent from the record has been reckoned from the end of the previous year in which the failure is comply with the conditions stipulated to the notification takes place. The provision of section 154 shall so far as may be applied thereto when a period of 4 years for rectification of mistake apparent from the record has been reckoned from the end of previous year in which complaint failed to comply with the conditions stipulated in the notification takes place. Every notification issued in existence of power of central government shall be laid before each House of Parliament. According to the exercise of the power in section 115JH of the Income Tax Act 1961, the central government has wired notification 9/2018 dated 2nd June 2018 specified exemption notification adaptation subject in which the notification of the provision of act related to the computation of income, treatment of unobserved depreciation, set of carry forward losses, set of losses specified, special provision related to avoidance of tax and collection of recovery of tax shall apply in the case where the foreign company is said to be resident in India in the previous year on account of POEM being in India and such foreign company has been resident in India before the said provision. Determination of WTV. If the foreign company is assessee to the tax in foreign jurisdiction when the depreciation is required to be taken into account of the purpose of computation of taxable income, the WTV of the depreciation asset as per the income tax record in the foreign country on the first day of the previous year shall be adopted on the opening WDV of the said previous year. When the WDV is not available for the tax period, WDV shall be calculated assuming that asset has been installed, utilized, and depreciated as you actually allowed as per the provision of laws of foreign jurisdiction. The WDV so arrived as on the first day of previous year shall be adopted to the opening WDV for the said previous year. If the judicial company is not assessed to tax in the foreign jurisdiction, WDV of a depreciation asset as appearing in the books of account as first day of the previous year mentioned in accordance with the laws and the foreign jurisdiction shall be adopted as per the opening WDV of the said previous year. Brought forward losses and unobserved depreciation. The foreign company is assessed to tax in the foreign jurisdiction. The brought forward losses and unobserved depreciation as per the tax record shall be determined year wise on the first day of the previous year. In the foreign company is not an access to tax in the foreign jurisdiction. The brought forward loss and unobserved depreciation as per the books of account prepared in accordance with the laws of the country shall be determined year wise on the first day of the said provision year. Other provision. Such brought forward loss and unobserved depreciation shall be deemed to be loss. Unobserved depreciation brought forward as the first day of the said previous year and shall be allowed to set off and carry forward in accordance with the provision of the Act. The remaining period calculated for the year in which accountant the first time taking the year for the year. However, the loss and unobserved depreciation of the foreign company shall be allowed to be set off only against the income of foreign company which is becoming chargeable to tax in India. Amount of its becoming resident in India due to applying of POEM. However, the losses and unobserved depreciation of the foreign company shall be allowed to set off only against the income of the foreign company in which such chargeable tax in India and shall be bearing resident in India due to company of POM. In the case where the brought forward loss and unabsorbed depreciation originally adopted in India, revised and modified in the foreign jurisdiction due to the action of tax and legal authority, the amount of loss and unabsorbed depreciation shall be revised on modification for the purpose of set off and carry forward in India. Period of profit and loss accounts and balance sheet in case where the accounting year of the foreign company could not be ending 31st March. The foreign company is required to prepare profit and loss account and balance sheet for the period starting from the date in which accounting year immediately following an accounting year begins up to 31st March of the year immediately preceding the period beginning with 1st April ending 31st March during the foreign company has been become resident. The foreign company is so required to prepare profit and loss account and balance sheet for succeeding period for 12 months, beginning from 1st April to ending 31st March till the year of foreign company remains resident in India according to POM. Example, first year, if the company accounting year of the foreign company in the calendar year and the accounting year of the foreign company and the calendar year and is the calendar year, and the company provides residence in India during the previous year 2023 for the first time due to POEM being in India. Then the company is required to prepare the profit and loss account balance sheet as per from for the period 1st January 2023 for March. He is also required to prepare profit and loss account balance sheet from 1st April to 31st March. For the purpose of carrying forward loss and unobserved depreciation in the case, since the period of 1st January to 31st March is less than 6 months, it is included in the accounting year immediately preceding the account year in which a foreign company is held as a resident in India for the first time. Accordingly, the profit and loss and balance sheet of 15 months period 1st January 2022 31st will be presented. For example, if the accounting year of a foreign company is from 1st July to 30th June and the company became resident in India during the previous year, the first time during the POM during India, the company is required to prepare profit and loss account and balance sheet from 1st July to 31st March. It is required to prepare the profit and loss account for the balance sheet from 1st April to 31st March. For the purpose of carry forward and loss unobserved depreciation in the case, since the period is more than 6 months, it is treated as a separate financial accounting year. The loss and the unobserved depreciation as per the tax record of the books accounted as the case may be of the foreign company shall be allocated on an appropriate basis. Applicability of provision of chapter 17B TDS provision, where more than one provision of Chapter 17B of Act applies to the foreign company as resides as well as foreign company, the provision applicable to the foreign company alone shall apply. The compliance with the provision of Chapter 17B of the Act as applicable to the foreign company prior to becoming Indian resident shall be considered sufficient compliance in the provision of the chapter. The provision of section 195 relating to the application of assessing officer determining the appropriate portion of sum chargeable to tax shall apply such a manner as included in the payment of the foreign company. Applicability of deduction under section 9091 of foreign tax credit. The foreign company shall be entitled to relief or reduction of tax paid in accordance with the provision of section 90 and 91 of the Act. The income on the foreign tax shall be paid and deducted in the offer to tax more than 1 year. When the income of the foreign tax has been paid or deducted, it is offered to tax in more than one country 1 year. Credit of the foreign tax shall be allowed across these countries in years in same portion in which income is offered to tax or assessed to tax in India in respect of the income in which related and shall be accordance to the rules of 128 of the company's income tax rules 1962. Non-applicability of notification. The above exemption, modification, adaptation shall not apply in respect of such income of foreign company which otherwise should have been chargeable to tax in India even if the foreign company had not become Indian resident. So that's income of the foreign company which otherwise would have been chargeable to tax in India even the foreign company is not. Okay, the applicability of notification where the foreign company became resident in subsequent previous year. In the case where the foreign company is said to be a resident in India during the previous year, immediately succeeding the previous year in which the resident in India, exemption, modification, adaptation shall apply to said previous year subject to the condition of WTV. The brought forward loss and amount of depreciation is also adopted on the first day of the previous year in which they has been arrived at the last day of the previous year in accordance with the provision of the notification. No effect of other transaction. Transaction of the foreign company with the other person or entity under the Act shall be altered only in the grounds that foreign company has become an Indian resident. Applicability of the provision relating to foreign companies subject to them other provision, the modification and adaptation of specifically provided by a notification. A foreign company shall continue to be treated as a foreign company even it is said to be resident in India. All the provision of the Act shall apply otherwise. Consequently, the provision specifically applied to foreign company shall continue to apply it. Non-resident person shall not apply to it. A provision specifically applicable to resident shall not apply to it. Shall apply to it. Applicability of notification. The notification shall be deemed to have come into force of 1st April 2017, meaning of foreign jurisdiction. The place of incorporation of the foreign company. Its decision applicable to Section 115 of the Income Tax Act. The rate of exchange of conversion into rupees or the value expressed in the foreign currency, where applicable, shall be in accordance with the provision of 115 Income Tax Rules. Anaksha. Determine the residential status. A summary. Application of the following chart: IC Indian citizen R resident, IPPV immediately preceding previous year, NR resident not ordinary resident, RO non-resident and ordinary resident, RPV relevant previous year, NP non-resident, EOP associate of person, HUF individual who stays in India that is less than 60 days, India is greater than 60 days of a residential previous year, then yes. Non-resident, less than the non-resident. He stayed more than 182 days in the previous year, yes, resident. And is the non-resident in any of the 9 immediate preceding of a 10 year, is non-resident. We know that they stayed in India for less than 972 year, non-resident. If non-resident or non-resident. The case of stayed in more than 182 days, he is left in during the respective previous year for the employment or as a crew member of Indian ship, no, then non-resident. Yes, yes, no, in the Indian citizen, a person of Indian origin visits to irrelevant previous year, no, yes, total income is more than 15 lakhs. From 15 lakhs, yes, I stayed in India 120 days for RP, the 65 days, non-resident. Non-resident. The deemed resident section 1A, an individual being an Indian resident having a total income other than income from foreign sources is greater than 15 lakhs during their respective relevant previous year would be deemed to be resident in India in the previous year. If he is not able to pay tax in any other country or territory or resident reason for the domicile or residence of such a criteria similar nature. A deemed resident section 1A always be resident non-resident. If an individual is a resident in India in their previous year section 6.1, then the provision of the deemed resident section 1A would not apply to them. Determination of resident status of HUF form AOP, BOA, local authority, artificial vision person. HUF form AOP, BOA, local authority, artificial vision person, control management. It is wholly partial in India, no non-resident, yes, non-resident. Company, the Indian company, yes, resident, even and known in place of effective management in India, yes, non-resident, no, non-resident. Is a Karta 9 previous 10 years, he is a resident of HUF, yes, Karta 9 previous 10 years, yes, HUF is non-resident, non-resident. Karta stayed less than 928 during the relevant previous year, yes, HUF is a resident, non-resident, if no, HUF is a resident or non-resident. Scope of total income section 5 provides a scope of total income which depends on the residential status of the associate. The scope of total income associate depends upon the following 3 important considerations. Resident status of the associate, place of accrual receipt of income, whether the accrued are deemed at the point at time at which income has accrued or to be received on behalf of the associate. The ambit of the total income of the 3 classes of associates following: resident and ordinary resident. Total income of resident or ordinary resident section 5.1 consists of income received or deemed to be received in India during the previous year. Income which accrues arise in India is deemed to be accrued arise in India during the previous year. Income which accrues arise outside India even if it has been received brought into India during the previous year. In simple words, global income of ROI is chargeable to tax in India. Resident but not ordinary resident. Under Section 5.1, the total income of resident or ordinary resident consists of income received and deemed to be received in India during the previous year, income which accrue and arise in deemed to accrue and arise in India during the previous year, income derived from the business controlled in a profession set up in India, even though it is accrue and arise outside India. All other income accrues arise outside India which is not as received or deemed to be received or deemed to accrue arise in India would not be included in the total income. Non-resident total income section 5 include income received or deemed to be received in India in the previous year, and which income which accrues or arise and deemed to be accrue arise in India during the previous year. Not all assessee where resident or not are chargeable to tax in respect of the income accrues, arise and received or deemed to be accrued arise to be received in India, whereas the resident alone, resident or non-resident in the case of individual and HUF is chargeable to tax in the respect of income which accrues and arise in India, arise outside India. Clarification regarding the liability of income tax in India of a non-residency after receiving remuneration of a non-resident external account maintained in an Indian bank. Circular 13 to 17, 11th April 2017, Circular 17 to 17, 26th April 2017. Income by a salary received by a non-residency for service rendered outside India or foreign ship is being subject to tax in India for the reason of salary has been received or service in a bank maintained in India by the seafarer. On receiving the representation of the regarding CVT exam, the manner noted that 52A of the Income Tax Act 1961 provided only such income of the non-resident shall be subject to tax in India that is either received or deemed to be received in India. According to CBD's via circular clarifying salary accrued to the non-resident seafarer service rendered outside India of the foreign going ship with the Indian flags and foreign shall not be included in the total income merely because the said salary has been credited in the NRE account maintained in the Indian bank for the seafarer. Similar the scope of income. Income received resident and non-resident, non-resident, non-resident. Income received deemed to be received in India, which is earned in India also. Are resident, non-resident taxable, non-taxable, non-resident also taxable, not ordinary residents are taxable. Income which accrue arise in deemed to be accrue arise in India during the previous year received in India elsewhere, all taxable. Income which is accrue arise outside India and received outside India for the business control in and from India. Then for a resident and non-ordinary resident, taxable, non-resident taxable income which accrue arise in the outside India and receive outside India in the previous for the for other sources from the other sources. For the resident will not lay accrue, will not lay receive on income. If he is a resident and ordinary resident, he is taxable. Others too non-taxable income which accrue and arise outside India and receive outside India during the year, preceding the relevant previous year and remitted to India during the previous year. So, income which accrue and arise outside India and received outside India during the years preceding to the relevant year and remitted to India during the previous year. Sources. So, I have doubts. Meaning of income received or deemed to be received. All assessee are taxable to all assessee are liable to tax in respect of income received or deemed to be received by him in India during the previous year, respective of the resident status and place of accrual. The income to be included in the total income of assessee immediately on the actual or deemed to receive. The receipt of income refer to the first occasion where the recipient get the money under the control. Therefore, when once the amount is received as income, remittance, transmittal of the amounts one place to a person to another does not constitute receipt of income in the hands of subsequent recipient at the time of subsequent receipt. Income to be received in Section 7. Contribution of 12% of salary to be recognized provident fund or interest credited in excess of 9.5% by annual aggregated credit fund. And contribution to central government or any other employee under Section 80 and amount transfer from unrecognized provident fund to recognized provident fund being employee contribution in the income deemed. So income to be included in the total income as immediately in accrual deemed to be received. The receipt of income refer to only the first occasion when the recipient gets the money under his control. Therefore, when once the amount is received in the income, remittance or transmission of the amount from one place or a person to another does not constitute a receipt of income in the hands of subsequent recipient at the place of subsequent receipt. So the meaning of income accruing and arising. Accruing refers to right to receive income, whereas it has referred to right to enforce payment of the same. For example, salary of the work done in December will argue through a month, day to day, but due to the salary bill being due on 30th December or 37, similar on the government securities, the interest payable on specific date arise during the period of holding day to day, but it becomes due on a payment of specific dates.